All right, welcome back. Microsoft hitting a new all-time high today on the heels of a bullish call from Cowen. The analyst there has initiated coverage. Outperform is the rating. $150 is the price target. We've made it our call of the day. There you go. Microsoft has positioned itself in the right secular growth markets to deliver an incremental $100 billion of revenue by fiscal year 25. Pete Najarian.
Cloud growth is obviously part of its subscription model as well. And by the way, we all want to say Windows is dead. Windows is not dead. That continues to grow as well. I mean, across the board, I think Satya Nadella 5 years ago, when he took over this spot as the CEO, had an absolute plan in place. And that plan was to transition this company to where it is now. Now, can it continue to the upside? Yes. But I would say this, it's getting a little bit loftier in terms of the PE, in my opinion. Do I still own it? Yep. Do I have some call spreads in there? I do. But I tell you, when I look at this stock, at some point in time, I think I love the growth, but I think that they've got to start making even better headway in terms of imploding what Amazon has owning the space right now. They own the cloud space. Microsoft is a deep, distant second. But if they can claw some of that market share back, Scott, I think then absolutely the stock can go a lot higher. But they've got to do that.
Everybody owns either options or bullish options in here or the stock.
Yeah, I own the stock, and Pete very well said. Here's what I think. This company is going to continue to do well, but they've got to perform.
Yes.
Right? If they don't perform, there's no safety net here. But I recently bought, take it easy here, Scott, I bought a new iPad. And when you go to buy a Microsoft product, because Apple doesn't have similar products like Word, the licenses have gotten more expensive. So
he hates the features, though.
So they're up charging more. Well, you got to buy Word, you got to buy PowerPoint, because Microsoft just doesn't, Apple doesn't compete with those products. But the point is, you used to be able to get multiple licenses for them out. Now they're charging more and more. Additionally, IBM's acquisition of Red Hat, it's not going to help them compete. Red Hat is still going to be open. Right?
Yes,
so you're right, still open source. So you're just going to have the same two winners there, Amazon and Microsoft. IBM is going to be a distant third, right? And Google's coming on.
Yeah, but isn't IBM coming off of such a low base that it doesn't need that much to?
Why do you
have to win?
Why are you going?
It's all about winning.
It may be important. I don't think IBM's capable of winning with current management right now.
I liked what they said about early days for the cloud, because clearly. Even though Joe, which was the only one on the desk that correctly pronounced Azure, as far as
I remember that day.
How they're doing that, Scott, I think it's all about LinkedIn, for my mind and for my money, from here, rather than just focusing completely on the cloud. The note was almost exclusively on the cloud. I like the LinkedIn part of this an awful lot.
They threw out $100 billion revenue by fiscal year 2025. They hit that. Stock is something you have to own.
Oh, yeah.
I think you have to own it anyway. I mean, it's the market-leading software cloud producer that's very well run.
Yep.
All right.